Hi everyone, welcome to another of our weekly recaps. We're here on a smaller team. We have Alex and Owen. YYC and Ed couldn't make it this time. So yeah, it'll be us discussing all the major events that happened this week. It was a really eventful one. So let's get to it. We'll be covering obviously the latest big news, the SEC defining Terra tokens, including UST, as securities. Earlier this week, we also had regulatory news regarding Paxos. The New York Department of Financial Services told Paxos to cease issuing Binance USD. There was, the market reacted to these regulatory news. And then we also have some tech-related news in crypto and DeFi with Polygon and CK Sync announcing their zero knowledge rollups and a couple of other interesting developments on the tech side. But definitely the biggest news this week is on the regulatory front. And it's huge. I mean, what we're seeing now could have really big implications for crypto going forward. So yeah, let's get to it. Let's dive into the stories we covered. Owen, do you wanna take us through kind of the latest?
Sure. So, as anyone watching probably knows, the SEC charged Do Kwon and Terraform Labs, the company he co-founded, with fraud because they were allegedly issuing securities, and that includes Luna, US. I believe US. I know UST, Luna, Wrapped Luna, M assets, which were part of the Mirror platform, which it could include commodities like silver and also stocks like Apple and Google. So I'm still catching up, and I anticipate we're going to be doing a lot of interviews over the course of the next couple of weeks as far as what the real implications of everything. But I mean, it's a huge deal. I mean, it's the SEC is coming after one of the most high profile projects and saying pretty much everything is a security, which is kind of the fundamental battle of crypto from a regulation standpoint, from what I understand. I mean, I know Alex has been digging deep on some of the regulatory issues this week and working very hard. But yeah, I mean, I'm still digesting it. I mean, maybe I should read the 55 page complaint, but yeah, I mean, it's crazy. It's crazy to see, Do Kwon's tweets resurface in a legal complaint, and really shows that, you're not playing around on the Bird app. So yeah, we'll have to see where we go from here. And Cammy's had some good interviews with some of crypto's most prominent lawyers, so also could probably review those. I know Gabriel Shapiro was tweeting about this and talking about the unprecedented nature of I mean, just like I think like calling some things like categorizing I forget, but categorizing something as a derivative swap, which is a kind of a well-known financial contract, which is a security. Yes, Cammy's pulling it up right now. Yeah, okay. Yeah, so the M assets are a swap. So anyhow, that's it. I wish I could say something super insightful, or I could say what's going to happen, but it's going to be a rocky road, and it seems like Gary is head of the SEC is pulling no punches at this point, and we'll have to hang on. And I mean, maybe we'll get regulatory clarity. Ed's been talking about in Europe, like there's at least clarity, so people feel comfortable knowing what they need to do. But yeah, that's my current take. I could probably get more sophisticated, but yeah. Cami, I think you're muted.
Yes, I was muted. I think what's really surprising here, and what's kind of new relative to all the other actions that the SEC had taken previously to kind of this one with Terra, and earlier with Binance USD, is that before the SEC had gone after tokens, after governance tokens, utility tokens, whatever you want to call them, but just like these stock like digital assets, where the leap to saying this is like a security, it's something that is like a stock. It's something that's whose value is directly related to how well a project does, and it goes up and down and people can profit from it. I think that to everyone in this space, I think it made more sense that the SEC would view as a security. But what's, I think, surprised most people now is that the SEC is going after stablecoins, and that what we knew in the space as this barometer for measuring whether something is a security or not, the Howey test, doesn't really apply, and that the SEC can actually use a much broader definition for what a security is. So that's scary because I think you mentioned the fact that there are no clear rules. So before, at least we had the Howey test, which it's like this I don't know, three-pronged test. Like we can pull it up, but basically it was like, can investors have a reasonable expectation of profit?
Yeah.
And so with stablecoins, you can argue, it's just a token that's linked to the US dollar. Like there's no way to profit from this. But in this case, I think because investors who were buying UST could deposit it on Anchor and earn interest on that stablecoin. That's what the SEC is kind of going after, and the fact that Doe was promoting UST like very clearly on his Twitter. That kind of that supports the argument that Doe was marketing this stablecoin as a way to make money, basically.
The idea there is that UST was kind of inseparable from Anchor, because I mean, like if I have $1 and I decide to invest it in some kind of yield bearing account, that doesn't make the dollar a security, but the argument they're making here is that like almost like the point of UST was to earn that yield, that it wasn't just a stable coin.
I would think so. Yeah.
So I think that's what's surprising. I think in any case, it's what's troubling is the lack of clarity. Again, like I think everyone would feel better if the SEC or regulators in the US just came out and said, okay, this is what needs to be registered. This is what can just like be freely issued. This is what's legal. This is what's not. Or here are the set of rules that the crypto industry needs to follow. And I know that's hard to do because there are so many different agencies involved. And I think, but at least like from the SEC's point of view, at least if we could get from them, what they are considering a security or not, because it's like everyone needs to, it's like just like guessing and in the dark. And then all of a sudden Gary Gensler comes out and is like, okay, like I'm not going to tell you what a security is, but if you do issue something that looks like it, I'm gonna come after you.
And it's
so
funny
unfair.
because there's like a crypto attorney collective, I guess, LexPunk, that you might be familiar with them, and they I think it was the case related to insider trading at Coinbase, right? So the SEC accused a Coinbase employee who had committed insider trading of doing so with securities. And something that folks in the industry have complained about is how the SEC won't come out and say this is a security. That kind of like does it like in a lawsuit that's aimed at somebody else for doing something different, right? So in this case, it's insider trading. They say that the tokens that they traded were securities. So this collective of crypto attorneys, they filed some kind of brief arguing that that's not how you should go about making rules. And the SEC's filed response to that actually said something to the effect of, well, we're not going to tell you what the securities are, because then that way people could figure out a way to like get around our rules, whatever they are.
That's so ridiculous.
And I'm paraphrasing from memory, but I think I'm capturing the gist of it there. So
yeah.
So it's like on purpose that they don't want to say, what's legit and what's not, like what a security is.
And it is tough because, Carrie, after you mentioned, I think that is the great point that the SEC is going after stable coins, which, to my knowledge, hasn't been a focal point. So, it's and stable coins, being kind of a key vertical, maybe the key vertical in DeFi is, it's going to be intense. I mean, I was looking at the brief a little bit while you guys were talking, and it does seem like they're specifically, there's a lot of reference to Anchor protocol, which was the, highly prominent, DeFi app, which offered 20% on UST, which like stimulated a huge amount of demand for UST. So, I think it is. I mean, I'm just trying to wonder if you can map that out onto other stable coins and see if like there's a better defense, because Anchor was so tightly intertwined with UST that, arguably, a DAI doesn't come with a pre-made yield generating product per se. But I mean, kind of like Alex was saying, there's maybe a way where you can kind of shim in you can kind of attack the weakest point of a certain vertical and like establish certain precedent, and then use that as leverage to potentially gain more ground from an enforcement standpoint. So we'll have to see how that goes. But
I mean, they if they wanted to, they could argue, like DAI is issued by Maker, and Maker does offer a percentage interest rate for DAI deposits.
I guess, the DAI savings rate woke up like last year, and they restarted.
I mean, it's so different from Anchor. Like, of course, like it's not like a 20% yield, and you don't have Maker, marketing this DAI savings rate as like this great opportunity at all. But I think like they could still make that argument.
Yeah, so. I mean, it's pretty clear. It's like clear to be able to map Anchor onto the DSR. So
I don't know about USDC if that's kind of safer, but at this point it looks like the SEC can just grab onto whatever obscure definition it wants. If it wants to come. I mean, that's what it feels like. This is kind of not a legal opinion. Like I have, this is just like from observing how the SEC has gone after like whatever, so many different projects, and it using kind of a different argument each time. So that makes it even harder to discern what's what's what. So let's go on to this Paxos story from earlier this week.
Okay.
Do you want to go over it?
Yeah, I can just do the basic walkthrough. So this came from Sam, our writer down under in Australia. But basically, Paxos, which is a crypto-oriented financial infrastructure company, is going to stop issuing Binance USD, which is, I think, a top 4 stablecoin at this point. Top 3, actually, 13 billion market cap. And they said they were ordered to by the New York Department of Financial Services, and that was confirmed by CZ, who's the CEO of Binance. And I mean, just again, you're seeing the tightening of the screws in terms of general enforcement, and especially with stablecoins, as we were just discussing. So
and something that's interesting there is that it was kind of like a two-pronged attack, right? So the New York Department of Financial Services, which in some way, shape, or form kind of gave Paxos the permission to issue the token. So it's Binance USD, but Binance just licenses its name, right? So Paxos is the company that's actually issuing the token. The New York State regulatory body, Department of Financial Services, gave Paxos permission to issue it, and it's been doing so, but has now revoked that permission. But at the same time, the SEC had sent Paxos a letter saying, "Hey, we're thinking about calling BUSD a security. Do you care to, tell us how you feel about that?" And Paxos, I don't know if this point is moot now that they're going to stop issuing new tokens, but that Paxos has come out and said that should they have to, they're ready to actually litigate this issue, and it would be interesting to see how that plays out, because you've got we might be talking about this later, but so much stuff has happened in the past couple of days. But the SEC and Kraken settled a lawsuit. Kraken decided not to fight. I don't know what happened behind closed doors, but ultimately they paid a fine and they agreed to stop doing what the SEC said they shouldn't be doing.
Yeah.
So it'll be interesting to see. I think as I don't know, whichever straw breaks the camel's back here, crypto firms start really fighting back and lawyering up, and I mean, Grayscale's already done that, and in the first half of this year, we should get an answer as to whether they'll be able to convert their Bitcoin trust into an ETF. And it's going to be really interesting to see how the courts, I guess, which side the courts fall on, right? Because something that I heard, I was speaking yesterday to an attorney who has 10 years of experience at the SEC, but then also, or more than 10 years, but then also spent an equal amount of time in securities law, but on the other side of the cases. And something that he noted to me was that when SEC crypto actions have been litigated, the SEC has almost always won. So the courts seem to think the SEC is, whatever it's doing, it's kosher. But but a lot of stuff has happened recently. So we're going to see, whether that pattern holds. And the big one that attorney is keeping an eye out for is the Ripple case, which everybody is kind of watching. And I'm not sure what the timeline is on that one.
Oh, that's been going on for years. But that's so interesting that the SEC wins most cases. Doesn't bode very well.
And I don't maybe it's they win most, and it's 2 out of 2. We didn't get that deep into the details, but it's, I mean, the fact of the matter is that when they get challenged, they so far have been winning.
Okay. Do you guys know what the argument was for regarding BUSD?
Why they had to stop issuing the token? So the notice from the Department of Financial Services didn't mention, but the Wall Street Journal, which had been the first to report the story, and they were citing a source familiar with the matter, et cetera, said that where was it? That DFS had found that Paxos failed to conduct periodic risk assessments and due diligence of Binance and of customers holding BUSD that Paxos had issued. And so I guess the department came to Paxos and said, "Hey, you're not doing this thing that you're supposed to be doing, and Paxos didn't comply. Like, it had been given a chance to do so, and it quote unquote failed to address those and other deficiencies. So it's all pretty vague, but
so it was related to risk with Binance and
just customers,
customers,
like people who have BUSD. It's like I said, it's vague,
not very clear,
not really satisfying.
No. Yeah, so it's kind of more on what we were just mentioning. It's just like this lack of clarity. Like, we still don't know exactly why Binance USD, what's wrong with it, like why it can't be issued by this US company.
And to the point that you had made earlier, it's like at this point, it's almost, and I've been told this, people are almost saying, like, give us crappy regulation, just give us something, you know, like in the European Union, it's kind of a done deal. They're set to implement this comprehensive crypto framework. It really touches on everything CeFi. The only thing it doesn't really deal with is DeFi and NFTs, but every other aspect of the crypto industry, it has something to say about. And, you know, I don't think anybody in crypto loves this rule or set of rules, but it's something. You know?
I mean, if the European Union can organize itself to, publish a set of rules with all its bureaucracy and its different organisms, and like just, different set of countries, like not just states in it, why can't the US do it? It's just like, it blows my mind, like that we're really still in this situation.
When I'm trying to like read about the EU and the, regulatory landscape there, it's like I don't even know like where the thing starts and where it ends, because there's so many, like, anybody who's never bothered to.
It's known for like being bureaucratic.
Yeah, it's like learning about its structure is an exercise in just like madness. It has like two legislative bodies, like, and not like an upper and a lower house, just like two. I'm maybe I'm butchering this, but it's wild.
So yeah, I don't know, and it's not like, like crypto has already been around for some time. Like, it's I don't think it's a good excuse to say, oh, like this is a new industry. It's new-ish, it's already been a decade.
But I think everybody, the suits probably just thought, oh, it's a pet rock. We don't have to, like, it could have been around for 100 years. Away. We don't have to, but now they're worried that anything that happens in crypto will have ripple effects in the traditional financial markets, and that's and we put out a story this morning on that explains the whole kind of crackdown that we've been seeing over the past month and a half.
Yeah, can you go deeper into this story?
Yeah, so hat tip to Nick Carter. He's a crypto influencer and investor, and I think he kind of got everybody talking about this, not just as a kind of like, oh, there is this SEC lawsuit and that SEC lawsuit, but as more of a kind of government-wide mobilization against crypto, and he kind of coined this term Operation Choke Point 2.0. It's a reference to something that actually happened several years ago during the Obama administration, but it wasn't related to crypto. But the idea is that it's not just the SEC. It's not just about, the question is are token securities or not. It's an effort from the Biden administration to kind of sever crypto from banks. And I mean, crypto needs banks, until it becomes the thing that you pay your rent and groceries, and it needs banks. Like you need to convert your dollars to crypto and vice versa. And what we've seen this year, I think the first significant action was January 3rd. It actually isn't even the right word. It's just like statements that are put out by different banking regulatory authorities, so like the Office of the Comptroller of the Currency, the FDIC, the Federal Reserve, saying crypto is super risky and you probably shouldn't be messing with that. And what Carter is arguing, and you know, what some attorneys have told me is that, you know, everybody kind of gets the message. It's like, okay, like they don't want us touching it, so maybe we won't. Toward the end of January, there had been a process that, you know, folks had been keeping an eye on for a while, which is there's a Custodia, a bank that is in the crypto space, had applied for something called a Fed master account. And this is like super in the weeds, but it's important because what it means is essentially it like, I'd even have to like.
Prax was trying to get one, right?
They are interested in pursuing this, but I don't think that they've applied yet. But the idea is basically that, like, all the kind of like back end banking stuff. So like, you know, the movement of funds and whatever, that's like a service that the Fed provides that you don't have access to unless you have a Fed master account. And if you want access to that stuff, you either get a master account or you have a relationship with a bank that does. But if you take that latter route, it costs money. I mean, bank isn't going to act as an intermediary for free. They're not going to do free work, right? So Custodia wanted this. It would be just, you know, really good for its business. And it was denied. And there was a point not too long ago when I think people expected Custodia to get approved. So, you know, the fact of its denial doesn't bode well for other crypto banks or entities that have also applied for one. I've been told that Kraken also was seeking one, and it's a more concrete sign that, you know, that regulatory bodies are actually, like, you know,
like
not
limiting
crypto. That they're limiting crypto's ability to integrate with traditional finance. And, you know, the question, I guess, that I had was, you know, is this really an attempt to debank crypto? Is it an attempt to essentially strangle the industry in the United States? Because without access to banks, it just can't work here, right? And, you know, experts that I had spoken to they wouldn't dismiss that idea, but they weren't so ready to endorse it either. But one thing that they did point to is it's a blog post. It's just a blog post from President Biden's top economic advisors that came out on January 27th, which happens to be the day that Custodia was denied its application. And that blog post says, and I'm paraphrasing here, it's absolutely imperative that we limit crypto's integration with the financial system and its ability to, you know, whatever volatility happens in crypto, for it to cause ripple effects in traditional finance. We can't let that happen. And Congress shouldn't pass any laws that allow crypto to integrate further with traditional finance.
Wow.
So, I mean, the message there is super clear, right? The question now is really just, how far do they take that, right? Do they actually, you know, cut it off, or do they just make it really hard? They set the bar super high, you know, really only a couple players that you know, have the money and the lawyers and whatever can do it, right? So I think that's what everybody's waiting to see.
And it's frustrating because it's like the SEC and, you know, other regulators, they're pushing for, you know, crypto to register and, you know, to go just like to abide by all the same rules that all the other, you know, banking and securities exchanges and issuers in the US you know, follow. But what you're saying is, even if and when crypto entities try to register and to follow these steps, they're denied. So it's like, what can you do? It's like, if you don't follow the rules, you'll be charged because you're not registering. But then if you try to register, you won't be able to.
Yeah, and even
It's
people that I've
ridiculous.
spoken to that are, not, they're like, is crypto a scam? I don't know. Even people on that side of the debate will acknowledge that, if the SEC, for example, is saying, all you have to do is register your token as a security, but then they're not making that easy, then yeah, the crypto industry has there's merit to their frustration there.
Mm-hmm.
So I mean, and Custodia's, there might be another example, but I think Custodia's, I mean, that's a one-off at the moment. So that's why the folks that I've spoken to are taking a wait and see approach before they endorse that idea of an operation choke point where they're trying to debank crypto. It's like, let's see what happens with Kraken. Let's see what happens with the Ripple SEC lawsuit.
I think also like
sorry.
the cases that we've seen haven't been so much directed at leaving crypto outside of the banking industry yet, right? Like it's been more like in this case with so the Kraken case, it was about kind of this crypto exchange offering staking. So it wasn't really about kind of their banking license or
Right.
with Terra, it's about UST and Anchor like behaving like securities.
Yeah, and everything the SEC has done, because those are both SEC lawsuits that you reference, everything SEC has done is separate from this idea of getting cut off from banking. It's kind of just more a part of the
like overall strategy, I guess.
Yeah, just to make life difficult, to really like bring it to heel. It's like, you're no different than any other, you're just like stocks, you're just like, like whatever. We're not going to treat you like a special new thing that requires its own boutique set of rules.
Well, if that was the case, fine, but then don't make it harder than regular assets or like So that would be, if you want to treat crypto like the same, okay, then let's have a level playing field for all assets. But yeah, I think making it harder, doesn't, it's so unfair. So I don't know. I think their implications are huge. Obviously, the U.S. is one of the biggest markets for crypto. It's where a lot of innovation is happening. It's a lot of where a lot of users are, a lot of holders, and if we continue to see this, then I think the industry will just go elsewhere.
It'll be so funny to see Europe poach American industry because of its business friendly regulatory climate. Like,
I think, it's,
and I've been talking a lot about Europe, but and Dubai and Hong Kong and Japan and every other place that's making some effort to craft a set of rules around the industry.
It's so surprising to see the U.S. being so kind of short-sighted here, compared with how well it handled the kind of the rise of the internet. Like the reason why we have Silicon Valley and why the U.S. is where all of the biggest Web 2 companies, or most, were born. It's because it just allowed the internet to flourish and grow. And it was actually, everyone kind of knows the story of how the internet came to be, but it was like a government / kind of army military project, right? Together with MIT, I think, and kind of US universities working together with government to develop this new technology. So like the difference with what happened with the internet and what's happening with crypto, it's so stark. Like I don't understand what happened there with the US, like how it got so off track.
Yeah, I mean, to I guess this is entirely speculation, and I'm kind of playing devil's advocate here, but it could be that, among the, many things that, the suits at this country hold in higher regard is our status as the financial capital of the world. That, if the American economy tanks, the world economy tanks, and that has to be protected at all costs. The internet was information technology, crypto is financial technology, and so that fear of just a super risky, in their mind, asset class damaging the world's most mature and orderly, I guess, financial market is a risk that they're not willing to take, and that's purely speculation on my part. But that's if I'm
maybe
trying
that's
to put myself in their shoes.
Yeah, I think maybe because in this case, this new technology can be seen as a threat to the US dollar, and maybe that's just too much.
Although so far it's been nothing but a great for the US dollar. I mean, like most crypto trends, I mean, you can correct me if I'm wrong about this, but most crypto transactions are denominated in dollars.
And most stable coins are pegged to the US dollar. So it's like reinforcing.
And those reserves are held in actual dollars or treasury notes. It's like, So
it's huge. I mean, I'll say I've been really naive, I think, in terms of just like not focusing enough on regulatory action and kind of just being fascinated with like the on-chain battles. And it's kind of humbling to just realize that, I mean, the whole discussion you guys have and understanding like deep-seated motivations and who wants what and what the incentives of a lot of regulatory bodies are. I mean, there's so much to unpack there, which it's like, I think, at least for me, it's very easy to get kind of fascinated with the day-to-day, just like battles and price action and protocol battles, curve wars, and then you realize that there's a whole different fight going on, which,
sure.
It's been humbling to see how real developments are.
Yeah. I think, and you can't forget like all the lobbying that's going on behind closed doors. Like banks are financing a lot of lawmakers and politicians in the US. So that's kind of another way that these interests are at play here. And just like highlighting this comment from one of our audience members, Savio, our DeFi protocols threaten some of the most lucrative financial services in the world. They're going to put up a fight. How can we help make a stand for what's fair? Yeah, that's, yeah.
I'm a government nerd. Yeah, voting's a good place to start.
Yes.
But there was something that I wanted to say about that, but it escapes me now.
I think, I don't know, like making a stand. I mean, we can. I think DeFi is kind of, the case where DeFi is just getting stronger and stronger with these kind of regulatory actions against, I guess, centralized finance. Yeah.
I'll point out that something that's pretty ironic is, and I'm going to preface this by saying that, animosity toward crypto can be bipartisan. I mean, the Elizabeth Warren bill that would like kill crypto was co-signed by a Republican, and people who like crypto or come from both sides of the aisle. I mean, look at Richie Torres. But that said, it kind of falls along partisan lines in this country, right? Democrats are less likely to support the crypto industry, at least the elected Democrats. And I don't know what regular people think. And it's funny because Sam Bankman-Fried donated a lot to Democrats, but ironically, it wasn't when the Democrats were up against Republicans in the general election. He was donating to Democrats who were up in primary elections against other Democrats, and the ones that he was donating to were pro-crypto Democrats. And it's just like, it is just an irony of how everything has played out, that had some of his preferred candidates won, there'd probably be a larger pro-crypto caucus in the Democratic Party at the moment. I think a lot of them ended up losing their primary elections to, more typical Democrats who probably don't know what crypto is.
Oh, wow. Yeah, I mean, I think, what do you think? I think it's, at least it's a like bipartisan issue, that it's not like one party is all for crypto and the other one is against. Like, at least you have people who will advocate for crypto on both sides. I think
you do. I mean, there's that group of House members that I think they're called the Blockchain 8, and 4 of them are Democrats, 4 of them are Republicans last time I checked. It is bipartisan, but there's a bit of a skew also. I mean, look who's in charge right now of this crackdown, right? So
yeah. So unless you guys wanna have other points to make about this whole regulatory actions and crackdown, we can move on to the tech segment of this week's recap. So we did have a couple like really interesting developments with we had kind of obviously markets react to the regulatory news, but yeah, maybe you can spend some time talking about the zero knowledge roll up developments with Polygon and CK Sync as well. This we've been looking forward to CK rollups for some time, and it looks like we're finally gonna get them. So, Owen, do you want to talk about this?
Sure. I should just mention Evo FX is asking, why did Paxos issue BUSD? Why not stick to Pax, the original USD stablecoin? And frankly, I don't know the answer. Paxos has been kind of off my radar. I know they had a stablecoin at one point, but I just wanted to say, Evo FX, I see your comment, and
I also don't have an answer to that, but I think, double check this. I think it's simply that Binance wanted a stablecoin for whatever reason, didn't want to be the issuer, and so found somebody else to do it, attached its name to that stablecoin, and that was that.
Interesting.
I think that's the situation, but I'm not quite sure.
Yeah, well, maybe like Paxos stablecoin had a lot kind of like just had less liquidity and volume, so maybe it was like a good opportunity for both sides. For Binance, because Paxos has been renowned for being just like following doing things by the book, ironically. So Binance, who is has had some issues before with regulators, and had been investigated, I believe, in the US, now had this very kind of legit issuer for its stablecoin, and Paxos it was able to issue a more liquid asset. I think. I mean, that's kind of why, just like speculating why that agreement happened, but I don't think they've said.
Yeah.
Fair
enough. So I can pick up the thanks, guys. I can pick up the ZK rollup stories. So I mean, basically, we had Polygon earlier this week announced that they're going to launch their Ethereum compatible rollup powered by zero knowledge proofs on March 27th, and I believe they were saying this is going to, Mihailo, I'm not going to pronounce this.
Mihailo?
Mihailo Belicic. How am I doing, guys?
Yelich?
Okay. That guy.
We share a mother country, so.
Oh, okay. Wait.
I'm cheating.
No. What's the last name though? How do I say it?
I think it's Bielich.
Okay, Bielich. Sounds good.
Yeah.
Okay. So basically, he did tweet. He was like, yes, we are going to launch the first ever ZK EVM mainnet, which is basically like means that you can port your code, which is compatible on Ethereum's mainnet, very easily to these ZK rollups. And it's a major milestone because right now all the layer 2s that we've seen, the most successful of which are Optimism and Arbitrum, are run on optimistic rollups, which is a different technology, which is technical, but basically optimistic rollups involve something called small fraud proofs, and ZK rollups involve something called validity proofs. And ZK rollups have been highly anticipated. Like Vitalik has written about them, saying that they're gonna, like, he thinks that the end game of Ethereum is ZK rollups, not optimistic ones. So it's just interesting. So, Polygon has kind of come out of, relative obscurity and in terms of being a ZK rollup player, and now came earlier this week and said they were going to launch the first one of these. And then you had ZK Sync, which is like, huge company, hundreds of millions of dollars raised. They 2 days later said, no, we're actually launching it. Like, developers register with us. Like, we're not open to end users yet. So, it was, again, like zero knowledge. The zero knowledge space isn't what I've been paying an extreme amount of attention to, partially because I feel like optimistic rollups have worked well from what I understand. But you had ZK Sync come in really quickly afterwards and also saying, no, we're the first, and they've been accused. They were accused like last year of like kind of marketing through announcements by saying they were the first live mainnet back in October when it was just open to developers. So basically, high level is just like the ZK rollup race is on, and everyone is kind of trying to be first and trying to define what first even means is valuable. But it's going to be very interesting. We've seen just Arbitrum and Optimism kind of running away, and Starkware is another player, and they're valued at like 8 billion last round. So
wow.
These are just huge players that haven't even launched mainnets yet. So we'll see how ZKs shake everything up.
Yeah, will be exciting to see, and it looks like we're finally going to see an actual live network, not just test nets and so on.
Yeah.
Okay, another tech development here. Flashbots offering ordinary investors MEV. What's this about?
Yeah, if there's anybody who is like super technically proficient watching this, apologies if I trip over myself, because MEV is one of those things that's just like I need a refresher every time I talk about it. But MEV is a way to, it's like kind of like a automated arbitrage thing where, the trades that happen on the blockchain, you kind of like slip in before an order somebody had put in, and you pocket a little bit of profit, being able to front run or back run somebody's trades. None of that makes sense to anybody watching. Don't worry, it doesn't entirely make sense to me, but
good luck.
But it's a way to kind of, profit off of other people's trading, and it's incremental, but it's like, when you do it with these automated bots a whole lot, then you actually end up making a lot of money, and it's used by validators, right? So the people who are actually confirming transactions on Ethereum and ordering transactions, they're the ones pocketing that profit. And Flashbots is a company that builds MEV tooling, and they announced that, or not so much an announcement, but somebody at Flashbots is proposing technology that would allow not just the validators, but also the users of the blockchain to get in on that profit, and it's substantial. I mean, and something that Sam, who wrote this piece, notes in the story is that in the 2 years ending last September, I think, the amount of money that users of Ethereum lost to MEV was almost $700 million. So there's a lot for regular folks to gain here. I mean, I don't know how much you'd have to actually use Ethereum to like get real money from it, but the idea is that through decentralized applications that you use, some of that would flow just to the user as well, and not just the validator. And it's cool. You know, it's Flashbots does good work. It's another way to democratize, yet another aspect of the money machine that I guess Ethereum can be, right? So,
money machine. I like that definition. Infinite machine and money machine.
Not nice. To be confused with money tree.
But this would be like really good news. I think like the way that it could flow back to users is just by getting better rates on your trade. Maybe that would be kind of just like a seamless way that this works. Because it does kind of suck. Like just like retail, like normal individual users of Ethereum are losing a little bit of money in every trade they do because of these arbitrage bots. What's Savio saying? That's the answer to my previous Doom post. Make tech that will be irresistible for big money no coiners. Yeah, I think just making Ethereum better for just retail investors is great news. I'd love to have someone from Flashbots on the podcast. I wanted to have Tina there for a while. And that just reminds me, before I forget to show this week's podcast, we have Andre Cronje. So check it out. We published this, I think, yesterday. So I thought it was a really fun interview. I enjoyed doing it. But anyways, so I think this is great news, like super positive development for Ethereum. So amid all the regulatory crackdown and kind of crypto ending because of Gary Gensler, we have this, so that's good. Then there were a couple of other interesting stories. This Siemens issued a bond on Polygon. We covered how JP Morgan had done this like FX transaction on Polygon as well. I think Santander Bank had also issued a bond on Ethereum. So it's just like another example of like just like real world assets overlapping with blockchains. And yeah, that's kind of on the same line as this. Owen, do you wanna go over this?
Yeah. I mean, so I think this is like, to me, some of the most fascinating stuff going on. Of basically Ondo Finance launched these tokenized ETFs. So I think they are. I'm not sure. I think they're so basically ETFs represent, they're tokenized ETFs representing U.S. Treasuries. So, and only institutions and or just people who have KYC'd, AML'd have been able to hold these assets. But interestingly, like at the same time, they're kind of, they're kind of dancing in this legal area where I don't know the specifics, but they somehow, I don't know if it's correct to say they deployed Flux Finance, but Flux Finance is closely associated with Ondo Finance and is able to collateralize these tokenized ETFs. And then so these players can actually, you can have your ETF, you can collateralize it, and then you can borrow stablecoins against that, sell those stablecoins, and re-collateralize the tokenized ETF. So basically, it's like a leveraged treasuries trade, which I mean, I'm sure it's put on in normal finance, but it's now very possible in DeFi. And the interesting thing is that supplying those assets, so supplying USDC and DAI to those institutional players who want to make that looped trade, that is permissionless. So while holding that tokenized ETF is permissioned, depositing those stablecoins is permissionless. So it's kind of this very interesting convergence and very clean kind of convergence of like anyone in DeFi is able to get these rates. And the interesting thing is that the rates are higher than what you can earn on stables on lending platforms like Compound and Aave. So it's just going to be very interesting to see as that demand for leverage happens, where that gives these permissionless stable lending, where the yield on these permissionless stablecoin lending opportunities ends up. So yeah, I just think it's going to be interesting. And if there's some kind of base rate that ends up higher than what's on Compound and Aave, which is like something like 2% right now, give or take 50 basis points, like I just think it could shake things up in an interesting way, and just that convergence of kind of a traditional finance product and traditional finance interest rates and crypto, like very definitively, is like I don't know. I just think it's going to be super fascinating to see how that plays out. So
for sure. And is the rate coming from just like from from treasuries?
So the rate on OUSG is coming from, like, Ondo Finance is custodying the actual ETF, and then I think in some way transferring that yield to OUSG holders. So those people are basically, they're getting this ETF, but it's on chain. You know, there's a custody point. So it is like a trust, you need to trust Ondo, but then they can move this OUSG around in DeFi. Yeah. So, and and Flux Finance is a huge part of what you can do with OUSG, which maybe you can't do as cleanly as, if you were in a traditional finance setting. So,
right. Super interesting. Yeah, I think kind of this convergence with DeFi and traditional like TradFi assets and real world assets. This whole trend that we've seen the past couple of months is super interesting. It's a real kind of like growth sector, I think, for DeFi. Definitely, I think kind of one of the most active sectors in this space right now. So definitely a trend to watch here. And then to end the recap, we have some NFT related news. Alex, what's going on with this Blur airdrop?
You're muted.
Yeah.
Hi. So there are so many NFT marketplaces, and I don't have NFTs, so every time I jump into the whole world of NFTs, I'm like confused by the thicket of different marketplaces. But Blur's a big one. Blur's actually, depending on who's doing the measuring, the biggest or second biggest NFT marketplace by trade volume. I'm not sure why I've seen that discrepancy from different trusted sources, but in any case, Blur launched last year. It's positioned itself as not just not just another tool to trade NFTs with, but kind of an ideological competitor to OpenSea. OpenSea is more of a traditional tech company. It's I guess the NFT equivalent of CeFi, right? Blur's plan from the get-go is to decentralized and like every other crypto protocol that says they're going to do that, part of that process was going to be to airdrop governance tokens to its users, and so they did that recently, and it was huge. It's also interesting because usually when there's an airdrop, people they're excited about their free money. They take this new token, they sell it, the value drops. In this case, enough people held that Blur was actually trading for for like twice as much as what it was worth when it debuted. And I wrote the story the day after, actually, on Wednesday, and at that point it was approaching $500 million market cap. Another thing that was interesting about it, though, is that it wasn't just like a regular airdrop stimulus package to people who had used the protocol, but it was also like a stimulus package for NFTs generally. I mean, that the day of, I was looking at the list of top NFT collections, and all of them saw like massive increase in frequency of trading day over day. And it's just like a little bit of good news for a subsector of crypto that's been hit particularly hard by everything that's happened over the past year. I mean, when you look at like trade volume charts for NFTs, it's steeper even than like the price charts for blue chip cryptocurrencies. And another interesting thing, Blur also kind of took some shots at OpenSea for technical reasons that I won't get into. If you want if you're a creator and you want royalties to be collected on the secondary sale of your work, you need to get a cut of every sale of your work. You've got to like choose OpenSea or somebody. You can't like have it happening on all of the platforms at the same time if your stuff is available on those platforms, right? And so Blur was, they put out a blog post saying, blog OpenSea, use us, and it's it's always interesting when you see direct competition in this space, right? Because typically people are kind of like, oh, we're all friends, we all just like, we're not trying to beat them. We complement each other, but Blur's going for it. They're like, we want to be top dog in the NFT marketplace.
Yeah. So interesting, and it's so interesting to see such just like a newcomer like Blur like take over in volume so quickly. I mean, OpenSea has been around for, I don't know, like since 2018. Like I think it was like, I don't know, one of the first NFT marketplaces, and the fact that Blur could overtake it so quickly, it's really interesting.
Last comment from me is, I just think like the contrast of their approaches and how they position themselves. Like OpenSea seems very much like of the artist, maybe almost surprisingly, as like people see it as a more centralized company. But then Blur has been like very much for traders, like they just like
not just traders, but like pro traders.
Yeah, exactly. No, they retweeted someone who like tweeted about how they like tried to game the Blur airdrop, so they're like kind of like more of like the greed is good side of things, which is
right.
I don't know. I just think that marketing contrast, as opposed to like, OpenSea like features the latest artist on their website. So ideologically, it's interesting. Yeah.
We're not traders. We're appreciators.
Yeah, exactly.
Collectors.
We're all gonna make it.
Yes.
Yeah.
Where did that meme go? I think
we're all gonna make it.
It died. It died with the last go around.
You didn't get an invite to the funeral?
Oh my god.
Yeah.
Oh, memes die so quietly. It's crazy.
Right?
Anyway, yeah.
I think GM is still strong, but I don't know how longer it has.
It's the meme that could.
All right. Well, I think that that's a wrap for this week. Super eventful. Maybe we can take it easy next week. We'll see. But thanks everyone for joining us. We'll subscribe to our newsletter, to our YouTube channel, where we're tracking everything that's happening with Gary Gensler on his crusade against crypto and other news. But yeah, thanks again, everyone. Thanks, Alex and Owen, and join us in the next one.
All right, y'all.
Bye.
Thanks, y'all. See you.